Yo, what's going on, everybody? Welcome back. So it's been a minute, and I had a video for January. I recorded it. The audio was crap. I played with it for a while, for a long time. Just couldn't get it the way I wanted. But we're back now. Your military video for January will be up the end of February, and then it should be every month after that. And we'll get back on a regular schedule. But today's video was about taxes. Yes, that's right. It's tax time in America. And typically I find that people feel one of two ways. Either you're excited it's tax time, because you're getting money back, or you're not so excited. Because you got to pay money. And there's a third group of people too, those who kind of don't care because they have like accountants and lawyers and things. But I don't know any people that wealthy or rich or that well off. And according to my analytics, the couple dozen of y'all that's here, I don't think y'all there either. So today's video is going to focus specifically on that first group, people who get money back and people who pay money, and how to do better with taxes. And by do better, I mean keep more of your money. And by keep more of your money, if you're in the first group, I mean get more money back. To do that, there's a couple of things I need. Number one, I have to explain how tax work. Most of y'all don't get it. I'm going to make it quick, so be fast, like pulling off a Band-Aid. It's not good. Number two, I need you to subscribe and like the video if you find this kind of stuff helpful. And if you don't find it helpful, leave a comment so I know that you don't find it helpful. And whatever you want, like constructive criticism. Don't tell me I don't like the sound of your voice. That's not helpful. I sound the way I sound. But if you have constructive criticism or things that I could change you differently, let me know and I'll take that into review. And the channel's early on. We're just getting started, and I want to make sure that I'm putting out content that is helpful and beneficial to anybody and everybody. So first things first, we have to go over how do taxes work. And because most of y'all just don't know how taxes work. I've talked to a bunch of people, and other than people who like do taxes for a living or like CPAs and stuff, y'all don't get how taxes work. America has a progressive tax system. I mean, you got to progress through the levels. So while we have different tax brackets, you can't say, hey, I make $100 grand. That puts me at 22%. So $22,000 is what I owe in taxes. That's not how it works at all. You got to fill up each bucket on the way up. So like the first one, if you make from $0 to $11,000, they take 10%. So that means off that first $11,000, they take $1,000. So everything past that $11,000 up to $44,700, they take 12% of that. So they take 10% off that first chunk of the 11, then 12% off of the next, then 22% off of the next, and 24%, and so on and so forth. That's how taxes work. When people say, I'm in a new tax bracket, it doesn't mean all their income gets hit at that new rate. It just means the money that they're making that put them in that next bracket. So if one year you're making $44,000, you're doing all right, doing your thing. You get a brand new job, more money, you're now making $50,000. Well, you're not paying that 22% on the whole thing. Just on that extra like $5,500 or so, that's above that's in that new tax bracket. That money gets taxed at the new higher rate. So understanding that you gotta fill each bucket on the way up, how do you keep as much of your money as possible? That's easy. You want to keep as much of your money in the really low buckets with like 10%, 12% as possible. People call this lowering your taxable income. The easiest way to do that, to lower your taxable income, is to contribute money to your 401k or 403b or TSP if you're like a firm employee, whatever, your retirement account. That's where you should be putting your money at. If you are paying money in taxes each year and you're not maxing out the money to your 401k, you're just giving money to the government for free. You are. And if you're getting money back and you're not contributing to your 401k, you're not thinking about when you retire, like later on in life. So with that being said, me being a banker, I've spoken to people, most people do not save enough money for later on in life. That includes you.
Who are you talking to right now?
You person watching this or listening to this or showing it off to a friend, like, yo, this is the boy I was telling you about. He keep it real with you. Y'all don't save enough money for retirement. You don't. And when you get that old, you're going to need that money. Think about it this way. If you're making a bunch of money now, and by a bunch, I mean more than what you will be when you retire. When you retire, your income goes to zero because you're retired. You're not working anymore. So all you have to live off of is the money you saved. And if you're not saving anything, and you're just hoping that Social Security keeps you afloat, talk to a couple of people who are living just on Social Security and ask them if they probably should have saved some more money. Ask them if you should save more money. I'm willing to bet 10 times out of 10 and tell you, yeah. Y'all need to save, y'all, myself included, need to save more money for retirement. Now, I get it. There are people who are struggling, who are just trying to make ends meet. Listen, I can't worry about tomorrow. I'm worried about tonight. I got you. I'm aware of that. I'm in that boat myself sometimes. But if you're thinking about your taxes, which the whole point of this video was how to lower your taxable income, how to give less money to Uncle Sam and keep more in your pocket, this is a vehicle to do it. You need to be maxing out your 401k. You're probably thinking, well, maxing it out, does it have a max? It does. 23 grand is the most money that you can put in your 401k. I'm positive no one watching this is putting $23,000 a year into the 401k. If you are, kudos to you. You win. Whatever. Here's a cookie or an award. But that's the easiest way to lower your taxable income, is just max out what you put into your 401k. Most companies will match what you put in. It's like all the banks that I've worked for, they'll give you like 5% of your pay. So if you put in 5, they put in 5. So not only are you saving money on your taxes, they're giving you money to save money. And the money continues to grow with Uncle Sam. Like, it's literally win-win. I don't know why everybody isn't doing this. But if you're not, that's what you need to be doing. Now, to be clear, there are other ways to lower your tax burden or to get more money back. You could have an HSA. You can get married. You could move to a different state where they don't have state income tax. You can move out of the city. You could leave the country and go to a place where there's no, federal income tax. Most people can't afford to do that. I get it. There were some people in Silicon Valley who left Cali and went to Texas because there's no state income tax. Regular folks can't afford to just uproot themselves or their family and just move to save money on taxes. And that's what I'm talking to, just regular people. People who don't make, 6-7 figures a year. They got accountants and attorneys. For people like us who grind it out, who like really trying to make this thing work, we got to save every penny we can. And we got to keep as much of it in our pocket or maximize the amount going into our pocket as much as we can. So that's the long and short of it. Hopefully this was helpful to somebody. It was beneficial. I didn't make it too drawn out or too difficult, but to put it all in a bow, taxes are progressive. You fill up one bucket, you go to the next. And that's how they work. Step 2, maximize what you're putting into your 401k. If your company matches and you're not putting in at least what they match, you are wrong. That's all I'm going to say. Because I need that $5, L. All right, but would you rather take $5 now or get $10 in the year? Because that's what matching is. It's like you put in 5, they put in 5. You put in 10, they put in 10. You put in 100, they put in 100. You're literally leaving free money on the table because you can't see past tonight to tomorrow. I'm Larry, man. I still don't have a catchphrase and I still don't have a sponsor. Like this, they put in like, this video brought to you by nobody. This video is brought to you by the goodness of my heart, trying to help people one video at a time. And I'm trying to get better with putting them out on a more regular schedule. I suck at editing and I'm just not very good with it. But hopefully this video was helpful to somebody. If it reaches one person and helps one person, then, mission accomplished. If you found the video helpful, feel free to like, share it with a friend if you think that they would need help understand how taxes work. And obviously, this goes without saying, I'm not your attorney. I'm not your accountant. I'm not an attorney or an accountant. You can't construe anything I said with legally binding anything. If you go into a courtroom and tell the judge, the guy on YouTube, like 100 subscribers said X, the judge is going to laugh at you. The prosecutor is going to laugh at you. If you have a lawyer, they're going to laugh at you. And if I have to be present, I'm also going to laugh at you.
It's funny because it's true.
Obviously, you want to take this stuff, review it with whoever your financial provider is, or like if you have a consultant, or just check in the comments. I'll put in the federal tax brackets. I'll put in the IRS required, maximize limits for the 401k, TSP, 403b, for whatever it is, the retirement account. So you can see what I'm saying is what it is. But I try to discuss in a way that's going to be helpful and easily digestible. But anyway, that's my spiel, man. That's how you kind of beat the tax man. Just so we can all do a little better. We don't need perfection. We just need progress. I'll take it easy.